Hello, Chase. I'm going to make you the presenter. Looking forward to meeting you and hearing you, and Happy New Year to you, Chase Taylor, at Pinecone Macro. So you'll see a drop-down menu for you, Chase, where you can unmute yourself, and looks like we have you up there, the forest for the trees. I like that. I use that for our sponsor, Forest Park. So waiting to hear your voice, Chase. Let me see if I have you muted.
Dale, I have unmuted him. It now says self-muted.
Okay,
but he's
so
still muted from his side.
All right, so there is a drop-down menu for you, Chase, to open up your mic.
Now,
you're calling in. I think he's calling in.
He's on now.
Hi, Chase.
Hey, you guys hear me?
Yeah.
There he is.
Hi, Chase.
Hey, Happy New Year.
Happy New Year to you, buddy. Very nice to meet you. Let me start off with why Pinecone?
I don't know if you're familiar with Mark Spitznagel or not, but he wrote a book called The Tao of Capital, where he goes into a lot of detail about sort of the strategy of pine cones, which sounds odd, but is actually really fascinating. And I just found that really compelling, and that was kind of the origin story. And I've been writing a free newsletter for a while, and write a lot about pine trees and pine forests, and use a lot of analogies for markets, and just kind of stuck.
I love those trees. Does it have anything to do with the geometric nature of pine cones and how it may apply to the markets?
Yeah, so I have written a little bit about that, the Fibonacci sequence in pine cones, but a lot of it has to do with the fact that fire is good for a lot of pine trees. Is something I found very interesting. Many different species of pine trees, they can't even spread their seeds unless there's a forest fire, which is just interesting. They find opportunity in disaster in that way. So
it's like the Chinese definition of opportunity: danger,
exactly,
and opportunity. Very interesting. So before we get going on some of your views and your looks here, can you tell us a little bit about your entree into the trading business or newsletter writing business? So how did you get started? What were you doing prior?
Sure. So also a military guy, Air Force. I started trading in 08.
Good timing.
Before that, I never really had any interest. But then whenever the financial crisis kind of hit, I started getting interested in economics. And I kind of started out in the Austrian school learning economics, not trading. And then over time, just started trading a little bit here and there. I naturally, like most people, got killed early on. But just whenever I found macro and started learning the different ways to take, geopolitics and macroeconomics, mix them all together with markets, and not to mention, the psychology side and everything else, it just started to really click for me, and I just love it. So ever since I started really digging into the macro side, I've just been trading more and more. But no business school or anything, just self-taught trader and macro analyst.
Okay.
And been doing the writing stuff for about a year or two. That's only so.
Okay, so your influence is what was the gentleman's name who wrote about pine trees and pine cone? I'm not familiar with his name.
It's Mark Spitznagel. He runs a tail hedge strategy hedge fund.
Okay.
Universa is the name of his fund. But he wrote a book, and he has another one coming out sometime this year. But I like his. He's not really a macro guy either. Just he's worked with Talib in the past doing some of the tail hedging strategies.
Okay. All right. So I see you have Dr. Copper up here, who looks like he needs maybe a doctor himself. What is your work telling you? I see the triangle that you have, kind of similar to what our Steve Volge had, very classical triangle breakdown and retest. why don't you go ahead and tell us what your views are and maybe what the macro implications of what you're seeing from copper may be?
Sure. Yeah, I had this one outlined and was kind of waiting for the same trade to happen. So whenever he mentioned it, I was happy to see that, because it looks like a clear technical breakdown, and it just makes sense from a macro point of view with global growth slowing and China kind of leading that down. So I think this one probably has a long way to run, at least possibly. And backing out to a weekly, you're kind of right on top of that 200 week right now. So it's going to be big to see what happens there. And there's some support here, so it'll be interesting. And then here there is a horizontal level that I think is kind of my target to get down to around this level.
Okay.
To see what happens, but yeah.
Okay.
And
so copper, kind of a sign of what's happening in China. Having been in the military, were you a pilot in the Air Force?
No.
Or
so I actually did a few different things. I worked on aircraft.
Okay. On carriers?
Also did a lot of and what's that?
Did you work on aircraft on aircraft carriers?
No. So I worked on B-1 bombers.
Oh wow.
Yeah, out in Texas.
All right.
I did some intelligence work, the geospatial intelligence, which is basically imagery intelligence. And also some work in some research laboratories.
So you were using charts in the military in some way, weren't you?
Not really. Although it was always fun to, before a missile launch in North Korea or something, to just kind of pull up a chart of gold and see what happened to it or something like that. But no, I've never really used them professionally though. All
right. Well, you brought up gold, so my statement for gold and copper, the difference between them is copper's about construction and gold's about destruction. So I see you have it up there on your screen. We've had a very nice run. Are you interpreting this move in gold that we've had recently as the beginning of a new bull market, or merely an impressive bear market rally from the $200 decline that we had starting last year from 1360 and then a low at 1160?
Yeah, so I've really struggled with this move. It looks so good technically, but I've been a pretty hardcore dollar bull for about 2 years now, and I still am, although it's getting harder and harder to be in some ways. So because I am so dollar bullish, I'm kind of struggling to think this move's real. But on a technical basis, I mean, it's been nearly perfect. But I still think the dollar has some room to run. What I think a lot of people don't realize is historically, whenever China is leading a downturn, that tends to make the dollar more of a safe haven than it is at other times. If anywhere in the rest of the world was doing well enough to take some capital from the U.S., I would have a lot different view of the dollar. But as long as the Fed's going to keep QT going and it's going to keep sucking up dollar liquidity, it's hard for me to be anything but a dollar bull, with the rest of the world slowing down perhaps harder than we are right now. So because of all that, I still think that gold's likely to have another leg down before it can really have the bull. But like I say, technically, it's been the way it chewed up the 200-day moving average and a lot of different horizontal, levels. This has been impressive. But you see on my chart there, it kind of has like a mini parabola going, which concerns me. So if it breaks down out of that, I would actually look to short it.
Okay, interesting. I learned something from you already, Chase, about the fact that it's hard to fade the dollar when there are economic problems in China, and we'll see if China can resolve it. I just want to get off course a little bit, because my friend who is always looking at potential black swan events. You have any view on what's happening in the South China Sea and what's happening on the oceans around the Spratly Islands, and challenges between the U.S. and China on the open waters? Do you have a view on that?
A little bit. So I don't feel like I have any insight on how bad it could get or anything. But one thing I do find interesting is Steve Bannon, who probably still has the president's ear, I would think, has kind of long been an advocate for being very aggressive with the South China Sea. His take is that the president should tell China to de-weaponize those islands, or we would do it for them. Which, I don't think anyone at the Pentagon would be too excited to go for that at the moment. But
okay,
just knowing that such an influential advisor for the president has that take.
Okay. Navarro on the economic front. So, I mean, trade war, and who knows what it leads to. So, perhaps we could take a look at your dollar chart. I understand that it feels like, this move is long in the tooth. Do you have any kind of upside targets in the dollar that if you were long dollars, you should be at least considering lightening up on dollar longs, and where a potential top might come in?
Sure. So I think immediately the 99 level is going to be a little bit hard. I think this area where it's kind of been some support and resistance around here is going to be a little bit of a problem. And as you can see, like this red zone that I have drawn out is something I've been watching closely. I knew that was going to be difficult to take out. It's just a really strong supply level, and it has been difficult to take out. But I'm just going to back up out all the way to a monthly. I know probably you guys don't do a lot of stuff that far out, but
I love telescopes. Are you kidding me? Not enough people use a telescope. Everyone's using a microscope. So okay, so you can see, go ahead.
You see that downtrend line there has been hit over a few months, and that it's not too far away from us right now. Still going to be right around 100.
Okay.
So I think the smart thing to do is going to be see how that level reacts, and then if it takes it out, then I think retesting, at least 102 is going to be in the cards. And I know some dollar bulls that think we actually hit new highs or test the 120 area.
And those are the real true deflationists that are looking for under 1,000 gold and so forth. 120.
Yeah, absolutely.
Do you? I'm looking at your screen and your setup. Any view on whether or not what's happened in the equity markets here, Chase, is potentially a buying opportunity and just corrective, or is your work telling you that we may have entered a new bear market? If you do, trade the stuff. Okay.
I do, and so I think we are in a bear market. However, so I was bearish for weeks, and I did luckily turn bullish last week as we came into what I saw as a nice little demand level, the 200 week.
Yeah.
And you have this, the trend line that goes back to 09, all kind of playing into the same space there. So I got bullish on a shorter term basis, and what I kind of see happening is us rallying back into this underside
26
support area that was really painful there for a while, and then probably coming back down.
Okay.
It does look like the economy's slowing enough to kind of kill the bull market, but it's going to be. I do expect it to be choppy with a lot of volatility and some rip your face off rallies. In the meantime.
Right. So I went to your letter, and I read a little bit about it, what you have to say, and tell me if I, got the right drift of what you're talking about. You seem to be, even though yields have come off the 10-year from 3.25 to where we are 268. I actually thought we'd hold 270, 275. That you're a long-term bear on the bonds, and that you're looking for shorting opportunities in the bonds and higher yields. Was I reading your letter correctly? Is that the right interpretation?
Yeah, I think that's right. I've been, again, about the same as the dollar. I've been bearish bonds for a couple of years, and I flipped bullish bonds outside of the 30-year. I'm long everything but the 30-year at the moment, but still longer term bearish. I do think the secular trend has shifted possibly. But for now, I the 2, 5, 10 all clearly, like that's a terrible chart. These are all yield charts, by the way. I always look at yields for whatever reason, but
okay.
And you can see, I mean, that's obviously terrible. I got short or long bonds whenever we hit here, and in this level I added on 5. You can see those horizontal levels, and that's where here on this level is where I got long the 5. Same as the 10 here. I do think the 10, whenever the 10 gets down to this horizontal area, could get a nice little bounce.
But ultimately, are you looking for that trend line you had on a couple of prior charts that you showed up on yields? No, I think it was one after that. Okay, yeah.
So the 5.
Do you think we could break that? You think we could break that trend line?
Yeah, absolutely. I mean,
yeah.
We're pretty early in this slowdown. So far, it's been a lot of sentiment and soft data and the leading indicators rolling over. ISM still doing great. So I think whenever and employment still looks great. So whenever some of those things start to roll over, which I assume they will, I don't know how bad, maybe not as bad as a lot of people are fearing, but whenever those roll over, there's a good chance all these bonds continue to rally. The main trading vehicle I kind of wanted to put on lately was a steepener between the 2 and the 30, and it's paid so far. Because you can see the 30's been pretty resilient, and it's coming into a nice little demand zone now. But I just think what's tough with bonds right now is you have all these macro forces pushing yields down, all over the globe, especially. But at the same time, the issuance is so high because the deficits are blowing out, and that's becoming sort of reflective. The higher the deficit goes, the more you have to issue, and then the higher the deficit goes. So it's sort of a battle between supply and demand, and then the normal reaction function of markets to go buy bonds whenever things get bad.
Okay, so talking about supply demand, a very vicious sell-off in the energy complex, hand in hand like a Siamese twin with equities. I'd like to see your lines in oil, and if you think we might be approaching some type of low, and for at least a reaction. So you have it breaking down. It looks like about 57 or so. What's your take here? We going to the 2016 lows, or you think we'll put in a higher low?
So I don't think we're going to go quite that low. But I've already been wrong here. So whenever we had the vicious breakdown, we were down about 30% or so. I actually bought a level, which isn't on the chart anymore, and got stopped out pretty quickly. And that was actually when I flipped on bonds. Like, I was a vicious bond bear. But whenever oil just went right through a great area and didn't stop, I was like, okay, like something's changed. Oil supply and demand explained it to a point, but not enough. So I knew global growth had to be really coming off in a way that only oil and a couple other things were kind of showing us. So that was actually when I flipped to being long bonds, which was painful for me because I've been such a bear for a long time. I actually really like oil on a fundamental basis a lot. I think everyone gets really caught up in U.S. inventories and ignores global inventories. Saudi Arabia, it looks like Saudi Arabia stuffed the U.S. with a bunch of exports that really, beefed up our inventory numbers, and some of that's going to be coming off in the months ahead. So, and I think shale oil is borderline fraud that's going to eventually have a lot of pain. So I think all the fundamentals are really good longer term. It's just a matter of waiting for something that looks like an actual bottom technically before you mess with it. And maybe that happens at about 40 or sooner. I don't know. But
okay, you mentioned waiting, and my belief is waiting is the hardest part. How do you maintain your discipline of being patient waiting for, you may have an idea or a bias. How do you remain patient? And you know, it's hard to be at your trading station and not trade. What tips do you have for newer traders, as you were once, for developing patience? Besides taking losses, that'll make someone patient. But is there any tip that you could give people? For example, how many trades would you say you make in a 1 month period?
I don't trade much at all. I probably put on, and so when it comes to futures and forex, which is almost all I trade, you know, I'm putting on probably 15 trades a month max. It's somewhere between 10 and 15 usually.
Okay.
Some of those will be two or 3 days, and some will be, you know, some might run for a month or two. But my tip though is, man, you always have to start with a chart. So if it's not a technical level that makes sense to you, you can't just go in and throw in an order. So put your limit orders in on the chart where it makes sense, and just don't move them.
And how about risk management? How about risk management, Chase?
So I am a big believer in stops. Technical levels, you know, using daily ranges to kind of help yourself position those stops, and then honoring them. And another thing I think a lot of people don't do enough of is layering in and out of trades. You know,
yeah,
it doesn't hurt anything to throw one lot on and to test the waters before you kind of layer in on the way up or on the way down. And people tend to press trades whenever they're doing poorly. You know, you should be pressing trades whenever they're going in your direction, in my opinion. So
okay,
adding in the trades that are good for you.
Yeah, because, you know, it's I say, you know, you don't expect perfection at the crap table. So do you put a one lot on just to make yourself pay attention, or, you know, your initial position, scaling into a position? Do you go like half and half or thirds, or what is comfortable for you when you're layering in and layering out?
So I really like thirds, but at the same time, I'm a, you know, I have a macro framework that's sort of an overlay for technical trading. So if I have something I have extremely high conviction in on a macro basis, then what I may do is have a core position that I hold even for months. So like being long dollars, perfect example for that is, you know, having a core position and then trading around it. So say that core position is a 20% position, and then that other 80%, I'm just, you know, trading the charts, layering in, and maybe until you're all the way 80%, you know, that other 80% is in the market, and then being able to scale that all the way back down to that core position whenever the charts aren't looking so good. But my macro framework hasn't changed.
Okay, so your business model now, Chase. I see you have a newsletter. Perhaps you want to show what you opened up the interview with, that page that you had for your website or blog, and what you do, what you offer to the public, and how the best way for them to get a hold of you after they have either heard us live or the video that'll be released in a few hours. Oh, you're a CFP guy. Okay, go ahead.
Yeah, so just a quick look at so I have a couple research products that for clients. I have the Cascade, which is sort of a little bit more of an entry level type of a product. And you know, I do have hedge funds and some institutional clients for this letter, and I also have a more expensive one that's definitely for more institutional type investors. And the website's just pineconemacro.com, and the easiest way to get a hold of me or talk to me is via Twitter, and it's just at pineconemacro. Okay.
All right. Well, really a pleasure meeting you. Like it or not, you're now my trading warrior brother, Chase. And I really hope that you have a very successful 2019, and that your words, you know, really help and edify your subscribers. And I really appreciate you coming in during a shortened week and sharing your views on the markets with us today. So good hunting, buddy. And thanks again for being with us and presenting your style and a few views on F.A.C.E. and appreciate your time today, buddy.
All right, much appreciated, Dale. Pleasure to meet you, and Happy New Year.
All right, everyone, that's Chase Taylor, and you could find him on Twitter, where he says it's the best place to get a hold of him, at Pinecone Macro. And maybe what's happening here, Chase, is the markets are going through the fire for a rebirth in 2019.
All right, let's see.
All right, buddy. All right, that's it, everyone. See you tomorrow. Good hunting. Remember, don't just count your pips, count your blessings. Looking forward to a great 2019. Remember, like Chase says, be patient and wait for the setups, and you can count on us to let you know when we see things. So everyone enjoy the rest of your trading day. Maybe see you in members chat and tomorrow morning. So good hunting for the rest of the day, and see everyone tomorrow. Adios. Thanks again, Chase.